Welcome to Stocks in Translation. I am your host, Jared Blikre. As always, I am joined by the voice of the people, Sydnee Fried. And today, we're doing something a little bit different. We have a very special guest, Madison Mills, in the studio. Before we jump into the conversation, be sure to like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, YouTube, wherever you get your podcasts. And we're going to talk about what's going on today. I am in the hot seat, taking questions from you guys. And we're going to keep it real here. And we're just going to kind of experiment and go round robin and see what you guys are thinking about. So
are you ready to be the guest, Jared?
I am ready to be the guest.
All right. Let's kick off with something about rotation, because market rotation is something that I actually kind of struggle to understand a bit. Are markets rotating right now? Why is everyone kind of talking about it and stressed?
Yeah, I think you can think about it this way. So markets can either be rotating or they can be trending. And when they're rotating, they tend to go sideways. So for instance, the NASDAQ hasn't had a new high in a few months, and we've seen the S&P 500 at record highs. So that tells you that there's rotation going on there. Now, you carry that forward, what does that mean for the average investor? When they see everything hitting new highs every day, well, that usually means we're in a bear market or bull market. And the opposite is also true. When things are going down every day, that's a bear market. But in between, you just have this market rotation. And so that's kind of like keeping the market alive. Some sectors do well, some sectors don't, and they rotate.
But how do you identify it? Like, let's say, I'm just using a random example. Let's say tech is down 10%. Does that just mean people are rotating out of tech? Right. Or do you have to see that 10% show up somewhere else?
So your correction territory is another thing. Let's say 10%, because that's the magical number for correction. Now, this kind of leads to a discussion about bull markets and bear markets. And this is something that I've said for years. Media has their own definitions of bull markets and bear markets that they use to make things simple and to convey information to everybody out there. And it kind of works, but people who actually trade for a living don't use these definitions because they're not useful for the most part. It gets back to, you're asking, so if we see the NASDAQ down 10%, do we need to see the Dow up 10%?
Yes, exactly.
It's not that perfect. It's not that easy. Finance is messy, and I'll leave it there.
Yeah. How do you understand the market rotation, Maddie?
Well, I was telling Jared this earlier. I think the market reminds me of a petulant child sometimes.
You got to pick it up.
As soon as they get exactly what they wish for, then they're upset about it. So for months, we were talking about the AI rally driving so many of those all-time highs that you mentioned, Jared.
Yes.
And how that's scary, and you don't want just NVIDIA and 5 other stocks driving the entire market. Now suddenly,
guess what?
You're welcome, guys.
Freaking out.
You got the rotation, and now, oh no, are we going to hit our price targets for the end of the year? Why aren't they just happy?
You ever hear this? Like, we want stocks at record valuations, and then they go down 10%, and everybody's thinking, okay, well, it could go to zero. It could go down another 10%. We could be in a bear market tomorrow, and I think that's kind of the theory there is that when things get a little bit scary, they seem a lot scarier than they are. So people get chased out of the market. But I think you're right. The grass is always green on the other side in finance. There's always somebody who you can just imagine is making a lot of money over there in crypto, and you got to make it up here in stocks. And how are you going to do that? Well, these lead to bad decisions for individual traders. And that's why we kind of get back to the passive investing versus active, because for most people, passive is probably the best solution.
Are we the drama, though, in the media?
Oh, we are the drama.
Yeah. Like, if it wasn't for people reporting on this, would the average person be like, oh, I'm really concerned about whether these companies are actually seeing AI show up in their profits? Like, I mean, analysts are, but...
Are you asking about the media function, like checking, checking corporate America? Because there's some different thoughts on that.
I'm having a crisis.
You're having a
crisis?
Maddie, I think you have some thoughts on this, actually.
Well, it's interesting. I think that they may not phrase it like that, but I think the investors that I talk to, and I do this a lot on TikTok in terms of like talking to people about their own portfolios, they're just worried about the tech trade, because what they know is they're a 401k millionaire for the first time, and we have record-breaking numbers for 401k millionaires because tech has gone up so much. And that's obviously a really simple thesis on that, but that's why when they do start to hear even, NVIDIA earnings did well, but then the stock went down, that's, I think, what the concern is, more so than us pontificating about it. But it also, it makes me wonder about this idea of whether or not certain sectors of the market have come in and out of a recession versus the broader economy.
Yeah.
And whether that's part of what we're seeing in the rotation right now, because it has been such a weird moment in the market. And maybe the macro environment didn't have a so-called recession in 2022, but maybe certain sectors did, and maybe we're starting to recover from
Yeah, when we talk about recession, it's contextual because we can have an earnings recession, which is 2 quarters of negative EPS growth. And then we can have a general economy recession in the U.S. But when we say that, I mean, the U.S. is a really big place. These national accounting identities. National accounting identities is GDP, GNP, these things that we try to measure apples to oranges and come up with one number for the entire economy. When you do that, you simplify things. And just to get back to the main point, could you have a recession in Florida while New York is booming? Absolutely. Right. And I think that accounts for a lot of the disconnect that we're seeing and that we hear in the media, not necessarily today, but always, is that there's always that disconnect. Some parts, I mean, it's possible that every place is doing well at the same time and every place is doing poorly. But when you have this dichotomy where some are doing well and some are doing poorly, then, you have this kind of like, not the word
soup.
A soup. How about that?
A little
I was going to say cognitive dissonance is what I was looking for, but soup.
Let's pivot to seasonality, because that's another word that when I'm producing my segments and we're on air, everyone's talking about seasonality. September's a volatile month. It's a wild month. Why is everyone freaking out? Is really September the same every year?
It's is it? Every September is different, right? But I think there are echoes, and I've come to understand the market in a way that seasonality is a lot more important than I ever imagined when I was starting out trading. And I think it just comes to the fact that people are adding money to the stock market on a regular basis, like every 2 weeks in their 401k. For the most part, that's on automatic pilot. And so that gets into people's payroll schedules and all this. There's a million different things going on, but in aggregate, you tend to see these cycles that repeat. And then when you have similar geographic or similar events occur throughout the world, maybe different catalysts, but they might happen at different times of the year. There are reasons why things happen in September. The summer's over. People have been vacationing. Time to reassess reality. You've got back to school, so people are moving because of their kids. And it just creates this soup, if you will.
But what fascinates me about this, Jared, and I'm very excited for you to correct me, because I really struggle with technicals versus fundamentals when you're sussing out a company or a stock. Yeah. I'm very pro fundamentals because technicals.
It's easier.
Oh,
it's
no.
Easier to understand.
Okay, well, let's not say it.
Oh, no, the king of the technicals.
But also, and I run into this a lot with guests on our live show where if they come on to talk about technicals, I just say, how do you possibly have a direct comparison between today and history when we're coming out of a once-in-a-lifetime pandemic?
Yeah.
We have an AI boom, a technology that's never been here before. What can the past teach me about this moment? I know I'm wrong.
No. The emotions, the human emotions of fear and greed are embedded in the market in various ways, and that is a prime example of how they are. And the reason I think technical analysis works is because, you can get a little too cute, and you can probably prove things that aren't true. You can read too much.
The data can tell you whatever you want.
Too much into the data, so it's easy to deceive yourself, and that's the difficult part, because technical analysis at the end of the day is an art. It's kind of a science, it's kind of an art, but there's a decision that has to be made by the operator. So how you're interpreting it is going to be different from person to person. But if you look at candlesticks, and I love candlesticks.
I know you love candlesticks.
Because they tell you 4 important points about the day. What was the open? What was the close? What was the high? What was the low? With that, you can determine what people were feeling throughout the day. And then these patterns over long periods of times, they're fractal in nature. So they build up in the slower time frames, the lower time frames, like intraday. They build up to the longer ones, like even multi-years, multi-decadal. And there's a million ways you can slice and dice all of this. But that's kind of how I see things.
Well, going back to seasonality, is there something for every month? Like, I know there's a January effect. Is there one for every month? February?
That's
March?
a good question. I don't think every month is equally important.
Yeah.
December's another good one, because every year things
Yes.
wind down at the end of the year. It's simple. Like I think the reason stocks go up at the end of the year is it's people go on vacation. They don't want to reassess reality. And unless there's a huge shock, which doesn't usually happen at the end of the year because people are on vacation, unless that happens, you don't have a need to have markets fully liquid 100% of the time.
When you guys are reporting stories and you're on air, do you actually consider what month it is? Like that's a stupid
I can't
question, but
figure
like,
out what month it is.
I don't even know what month it is. I kind of mean like, all right, so everyone talks about like the January effect, so you start talking about it, right?
Yeah.
But like, is that another media thing that everyone just starts talking about, or do you actually say like
the media?
Yo, what's going on?
I love it.
I'm just trying to understand why we do some of the things we do, right? If it's April, are you like, well, I know it's April because stocks are doing this and
April
last
showers bring
and
May
flowers.
flowers.
All right.
Exactly.
Is that what you take into account?
I
Only in September and December.
I think I pay attention to the big ones. So I think January is important. I think September is important. December, volatility has its own schedule, which is a little bit independent of equities, and we can talk about the VIX and why that is.
Yeah.
But I think seasonality in general, if you were to look at stocks and bonds and the VIX and currencies and put it all together, this is what Jim Simons of Renaissance Technologies did. He recently died, but over 30 or 40 years, he had annual returns, compounded annual growth rate of something like 50, 60%.
Wow.
That is, year after year after year after year after year. That compounded. That is simply amazing. That was all alpha embedded in the market because of seasonality that he unlocked because he got together a crack team of PhDs and they just figured it out.
So sticking with seasonality a chunk, what trends are both of you hearing from guests or in your research that we're going to see as we head into the winter months?
So I look at September, and the reason September I think has some of the worst returns on average is because that's when you see this back to school, when you see this reassessment of reality after the summer, when you see the VIX, you don't crash every year, obviously. And so when we talk about history, we talk about averages, and it might be a median, but you got to consider it. It's not an extreme. It's just, it's kind of what's in the middle. I don't know where we began with this question.
Well, what are you watching, Maddie? I mean, I'm thinking like even presidential election, rate cuts even for the next year.
So you can gauge seasonality even on the U.S. presidential cycle. So not just every January, but the January of the first year of a new president, or the December of the last year, or the election, election month of election year. November in this year is supposed to be very bullish right after the election because that's when we see the clouds clear. Historically, that's what happens on average, but again, it doesn't have to.
Yeah, it's fascinating too, though, because even with something like the election of 2016, there was this idea in the market that there was going to be a crash if Trump won, and then Trump won.
There was overnight. And let's not forget that. It was very dicey for a few hours, and then it wasn't.
And then it wasn't, right? And then, actually, this is going to be good for... the way that I think about it is that, and I'd love to get your thoughts on this later, Jared, stocks always go up. The question of whether or not they do and why and how much that's driven by tech versus who's in the White House is a fascinating one to me. So the market is just an optimistic little baby at the end of the day. And so
let's pick it up.
Once it digests the data or the information about who's president, they'll say, okay, well, this will be good for business, whatever, let's move on.
All right, we're going to take a short break here, but when we get back, more getting personal with Sid, Maddie, and me. We are back, and Maddie has a scintillating question here. Go for it.
I do. Well, we know throughout kind of the street mentality that stocks always go up. It's in my Twitter bio. Stocks go up. Why is that true?
Well, Miles said it years ago. It's actually Miles Udlin, head of news here at Yahoo Finance, who coined that phrase, I believe. It could have been anybody, but I think, and Miles has been saying this for the 8 years that I've known him here, but because you look at history, like almost every year stocks go up, and there's outlier years, and there's maybe 20% of years that don't. But for the most part, if you're in the market over long term, things go up. Now, where people get tripped up is when they try to start juicing returns with leverage and getting those returns quicker. Like if you want to retire on a few $1 million when you're 80, that's a much different plan than making a few $1 million in the market tomorrow. Yeah. And that's kind of what happened over the pandemic when we had all the stimulus money, when we had that fed into FTX. People got hooked on leverage and thought the party was going to last forever. Then it didn't. And so that's an example. Stocks don't always go up, but A lot of the time they do. I think most.
I hope they do.
They do if you own
For
the
my own
index,
sake.
right? If you're doing the Warren Buffett approach to investing.
Over, like, you could probably measure over 5 years, over 10 years, the S&P 500 really hasn't gone negative for that long of a time. Now, we've had long bear markets. The Depression, the Great Depression, 1930s, was a big one. And we've also seen, episodes since then. But for the most part, we've seen a lot more bullish years than bearish.
I think like if you don't look at your whatever brokerage or retirement accounts you have for a while, you'll be surprised. But if you're someone who's checking in with them every day, you're like, oh, damn, it went
I
up
would say
a little, it went down.
I don't know. Do you check your account? I find I try to stay away if it's unless I want to feel like I want to do something. I don't want to be informed. I want to know for sure.
I try to do a quarterly check-in.
Oh, that's good.
That way I see that it went up. But also, honestly, I've been investing in my 401k for the past 8 years. I mean, it's been a pretty great run. So
yeah,
it's a good dopamine hit.
I think since I started working in this industry, I check it way more than when I was just kind of like letting it go. I like anything, if you're focused on that in your life, you're going to like have it happen more.
Yeah.
I have a personal question for both of you. We'll start
Let's
with
go.
Jared, because it's kind of coming from what you were just talking about. What do you do on days when you don't understand the market? Whether that's like a stock move and you don't know why this is happening, or like maybe data came out and things are moving in a contradictory way.
I mean, it happens all the time that the market will make a sudden big movement, and I think this happened yesterday, or maybe the day before, but it happens quite frequently. Market goes up or down for no reason. What's going on? Well, it could be just some random big order that got, placed at a certain point in time. I'm going to get back to
the technicals. You probably look at the technicals when you don't understand.
Well, so what I will do is I will look at the technicals and I will go to a terminal. I'll try to match up news timestamps. I'll try to see, what news was coming out at this time of the day that we got a VIX spike or we got a dip in the S&P 500. And then if there's something there, then you have an answer. But a lot of times there's not an answer there. And the tricky part, and you guys know this, is sometimes there's something there and you latch onto it. Like, I want this to be the answer. Home sales were down today. That's why the market is down. But it's not always that simple. And sometimes it's just random.
Oh yeah. No, as a producer, I think it's so scary when you're not as familiar with a certain subject and you're trying to attribute something to that move. You're saying like gold is moving because of this. No, not necessarily. You can say what the move in gold is and then say that something is happening, but you can't like attribute the two.
I love these are reporter tricks.
Yes.
You want to get it right. But that's true. You don't want to ascribe meaning if you don't think there is one. And that's also editorializing. So
safe move is to not.
Yeah.
Well, I always just say one potential explanation for the move.
That's
It's
fair.
X, because that way you're safe regardless. Because to your point, Jared, there's no way to know if it's a hedge fund selling off $50 million in a stock and then retail saw the move 8 hours later and then they got on board. You really are never going to have full transparency. Correct me if I'm wrong.
No, how are you ever going to have full transparency? I mean, eventually you might know everything with perfect hindsight, but I don't know if that ever happened.
Not in the immediate,
No.
right? I remember I used to, when I first started covering markets, I would see something like Tesla was the biggest mover of the day, and I would call a Tesla analyst and say, okay, why is it moving? And they'd be like, you idiot, it's Tesla. It moves a ton every single day. And similarly, I remember talking to Steve Sosnick with Interactive Brokers about why the market was selling off, because I was so used to it ever since I started covering markets. It's been going up, 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 and up. So we had a big sell-off, and I was like, Steve, what is going on? Are we heading for a recession? And he was like, Maddie, call me on the days when it's still hitting all-time highs, not the days when we're recovering just a little bit to the downside, because this
that's
is
a great
normal
point.
correction.
Because what's happening in the market is you could be at record highs, but the market might be ready to just go down. And I think that's why a lot of people pull the plug on their investments. They're like, we're at record highs, it has to go down. No, it doesn't. But sometimes, and you got to look for the signals and study history to see when it might go down if you want to try to time the market. But that gets back to the active versus passive. Do you want to be looking at your account every day? I've had a passive account here since I started Yahoo Finance. I've enjoyed kind of watching it, but my history is day trading futures with a lot of leverage, and that's a totally different game.
Oh my God, I would not be able to do that.
Yeah, how do you have the stomach for it, Jared?
It's hard. It just takes, like anything else, you do it for a while, you notice some patterns, and you develop a methodology, you execute it every day, and then you get some results, and you say, well, is it worth doing this anymore? I said no, because it was just a lot of headache, and I'd rather, do this. It's funny. we're getting personal here. So I'm going to
I love the personal stuff.
Everything I do in this job, I once did for free.
Yeah.
Yeah. I used to write newsletters, gave it away for free. I used to analyze charts, gave that away for free.
Well, wait. So tell us, Jared, how you A, got into journalism, but B, got into financial journalism specifically.
I was trading 20 years ago. It's 2005, 2006. Things were really boring. S&P 500 was traveling like a few basis points every day. It was doing nothing. And everybody's looking for some excitement in the market. And then we started getting these reports in 2007, and strange things happening in August. And Goldman Sachs is trying to cover their housing position, but you're just hearing rumors. Nothing was making sense. And I understood the few markets I was trading, but I didn't really conceptually understand everything that was going on around me in the world. The world was the financial world was blowing up. So it was kind of a scary time. I started researching it. I started writing about it so I could understand about it. And I started writing this newsletter, published it every day for a few years.
On your own?
Yeah.
Oh,
and then it
wow.
got picked up. It was a trading newsletter.
Nice.
So I was literally trying to write, okay, the market might do this on this report at this time, watch this level. And that was my
I love
report.
that. What about you, Maddie?
And then it took off. I mean, that's really cool. That's what they say to do, by the way, for anyone who wants to be a content creator or anything else. They say just
writing
start doing
is the key.
it.
Yeah, start doing it. Write, go on video, make your own videos, go on YouTube, TikTok, whatever.
Yeah,
Right.
take action, guys.
Take action.
This is your call to action.
Exactly.
Maddie, how did you get into the biz?
I was always a reporter. I studied journalism in college, and then I was covering politics. And this was around 2016. It was very very intense time. Yeah, I know. We were all
Brexit
in
buddies.
Midtown together.
You were
Yes,
in Midtown.
exactly. And then honestly, I was at New York Magazine. They ended up culling their video team, so I got laid off. Ended up at Bloomberg, and they are much
That's a nice
more.
jump.
It was a very good jump. I got pretty lucky. I started the new job within about a week, so I was able to double
That's a
dip
real nice
salary
jump.
wise, which was really nice. And
We need some career tips over here.
Yeah, really.
yeah, I'd
Wait, can
love
we see
to
your
talk
resume?
it. Yeah, I mean, I'd be thrilled if you guys will take me more often on the show. No, but and then being at Bloomberg, just being a financial reporter is kind of part of the game. So
Yeah.
just started asking a lot of questions and learning as much as I could.
That's what it is. Ask a lot of questions and try to do it.
We have a couple minutes left, and I want to get from each of you. So my personal thing is that no matter how much I try and teach myself about options, I cannot seem to understand it. And I want to know from each of you, what is a financial term or asset or something that you just cannot you guys are, I can understand anything. Okay, I want to hear something that you not that you don't understand today, but maybe that you struggled when you were younger.
I got it.
Yeah.
Okay, there are things going on in market microstructure that I just have never been able to get the information on. So it's not even a matter of understanding, a report that has come out that explains what's going on in market microstructure. It's just getting that information in the first place. And I could probably sit down with some quant traders and do that, but I've never done that.
Not the quant traders.
No, but I need to have a nice conversation and understand some things about market microstructure.
Yes.
How, like when this happens, when somebody actually puts in one of these 32 different order types, exactly what happens. So.
I don't even know what market microstructure is, and I am scared to ask.
Well,
so
there's gonna hopefully a little bubble will have popped up and inform
but I'm
people.
gonna skip to Maddie because I'm scared.
I think that's a really good point, though, Jared. But I would say kind of the same thing, but in the bond market. I understand broadly, U.S. Treasuries, for example, but I'm not great at global bond markets and how the German bonds trading at a certain level might impact, how we think about the ECB and Fed rate decisions in the U.S. and the global comparison of bonds is something that I think tells a really great story about how the health of the global economy is doing. And I'd love to be able to. It's a dev area. Yeah.
We are winding things down here at Stocks in Translation. Be sure to check out other episodes where you see podcasts, Apple, Spotify, iHeart, Podtail, Pod Paradise, and more. Keep it locked.